Bank of England increased the base rate in June 2020 by 0.25%, taking the Bank of England base rate to 1.25%. Now, that was the 5th consecutive increase by the Bank of England, which is unprecedented. Now, what does that mean for mortgage borrowers? Well, if you're on a fixed rate mortgage, then your mortgage repayments each month will stay exactly the same. But if you're on a variable rate mortgage or a tracker mortgage, then you're likely to see your mortgage rate go up by a similar amount. So what does that mean for your repayments? Well, for every £100,000 that you've borrowed in a mortgage, then you're likely to see your mortgage repayment go up by £13 a month. So if you do the numbers, if you've got a £200,000 mortgage outstanding, then your mortgage repayment a month is likely to go up by £26 as a result of the latest 0.25% increase. So what is going to happen to the base rate going forward? Are interest rates going to keep going up? Well, much depends on the economy and in particular inflation. If inflation proves sticky, then the Bank of England is likely to continue to keep increasing the base rate and mortgage rates will respond in turn. Now, at the moment, the market is predicting that the Bank of England will raise interest rates by 0.25% at its next 2 meetings, and that is in August and September. But these things change all the time, and predictions are seldom right. So what we do at Money to the Masses, we provide an article, which we link to in the show notes of this particular video, that highlights the current thinking on where the base rate is likely to go in the future. Right now, the market thinks that the base rate will be near 2.5% by the end of 2023. So if you are coming to the end of a mortgage deal, a fixed rate deal, or you are thinking of getting off your tracker mortgage rate or your standard variable rate, then you may need to act fast because mortgage deals are disappearing all the time, especially if the market starts to believe that the base rate from the Bank of England is going to continue to increase. But there is good news. You can fix your mortgage rate even if you are coming towards the end of your fixed rate deal. And how you do that, we explain in that article that I've already mentioned. But ultimately, if you are worried about your mortgage rates rising, then you need to speak to a mortgage advisor who can search the market for you and find the best deal based on your personal circumstances. Because the deal that you are able to secure will depend on factors including your income as well as your credit report. So make sure you like this video if you found it useful, and make sure you subscribe to our YouTube channel, as I will be making regular updates on the likely path of interest rates in the UK as predicted by the markets.